All right, hello and welcome everyone. Doug here with thelincolnlist.com. I want to welcome you back to another weekly edition of Stock Market Mutterings, where I'll do my best to try to find you some quality trading setups. This is for the week ending on May 6th. As always, if you need help with your personal trading, you're trying to take it to the next level and you want to align yourself with a professional trading community, visit thelincolnlist.com, click on the Trade Room tab, and you'll be directed to our live trading room. Now, one of the things that we're going to talk about this week, especially that goes out to all of you new traders, aspiring traders, or those that are just struggling, is one of the biggest things that you can do to see immediate results in your trading is to block out all of the noise. There is so much noise that's coming at you these days. You got everybody chiming in with an opinion. You got all this stuff on social media. You got CNBC, you got all these other financial outlets that are just inundating you with just ignorant news stories. At the end of the day, doesn't mean anything to your trading plan. And this was a really good week for that because we saw a bunch of stuff come out about Italy. We saw a bunch of stuff come out with tariffs. But in the end, it just ended up where it all started in the first place. So we're going to go over the SPY here just real quick and kind of give you some of my thoughts and feelings for the market as we progress into the later parts of the week. So when we were talking about last week, and this is a good example of this, guys, this is what I was talking about. I thought we had a chance of going up above that 274 down there on that bottom chart, getting above that 274. And I thought, hey, if that happens, there's a good chance that we're going to start talking about 280. That's the next area of resistance or the next area of importance on this chart. It looks like that's something that could be done. So pay attention to that. On the flip side, if you start selling off and you start losing that lower band of consolidation, which was, I think right here it was about 270. I think that's what we talked about because at that point we were just in this like really tight range. Then you'd have to look at the 50 moving average. Well, what ended up happening is when this Italy story came out, the market sells off. And I mean, it sold off pretty hard that day. I think it was down 400 points or something plus on the Dow. You haven't seen too many days this year where the market's gone bell to bell with pretty much no bounce whatsoever. I mean, it was just a gradual selling all the way down. Now, what I say about noise is you kind of have to use common sense when you trade. That's probably it is the best trading indicator that you have. I mean, we've been through a lot. We've been through, interest rate problems here with this market. We've been through nuclear war threats. I mean, what could be worse for us than a nuclear war with North Korea? I mean, think about it. If the market's able to shrug off of that, what the hell is some debt or some interest rates in Italy going to have some lasting impact? But CNBC's running all this stuff. They're talking about contagion. It's like, geez, that's the kind of stuff that tries to shake you out of your positions. Anyway, let's get back on point. What the market does is it sells down into its 50 moving average, and then you saw a pretty solid bounce. It's the first solid bounce that you got, and you got a green day the next day. Then it comes out, we're talking tariffs. Tariffs sells off that move, and then back again on Friday with another strong bullish day. So what you're seeing is the market is back to shrugging off this news. It'll get hit once, and then it comes rallying right back. Now, it's not like circa 2017 or 2016 in those days of Brexit where the market got hammered and then it turned around and not only retraced the move but made some all-time highs. But you're still starting to see what I had pointed out in the last 2 weeks of these is buying the dip seems like it's trying to creep back into the market. It's not as obvious as what it was a year ago, but it's still there. You saw some sell-offs in there. You saw some pullbacks. All of them at the end of the day got picked back up. Where we stand right now after all of this noise, we're right where we left off last week. We get back above this 274s, then we can start talking maybe about 280 in a sustained run. We start selling off back there, just look between the 50. So right now we're at 274s and the 50 SMA on the daily chart. Those are your two levels that you look for. And if we can get a couple of days of selling, then maybe you can buy into some sort of pullback down to the 200. But right now, that's not on the table. That could change it any day, but that's not what I'm looking at. Pretty strong close on Friday, so I would expect that 274 at least tries to get tested one time throughout the week. Now, one thing also to pay attention when we're talking about common sense is during this whole time that the market is selling off or going back and forth, the bigger names, especially the tech names, you had Apple, you had Facebook, you had Netflix, you had Amazon. These things were completely immune. So while the market is getting sauced for 400 points, these things were just sitting there, holding up really well throughout the day. Some were just red, but only very small, like Nvidia, a couple of those, which means usually when you start to see a heavy sell-off and you're in something like a 400 point down day, And then you're looking at the green stocks. Those are usually ones, if that market starts snapping back, those things are going to go buck wild. And you saw that on Friday with a huge move on Netflix. If you were following on Twitter and Stock Twits, I was talking about this trade. But what I want to look at here, I'm not going in the past. We've got to move to the future. That's where we're going to make our money. Is I want to first take a look at some Apple here. Let me move this chart over here for you. Okay. This has been the kind of chart that is breaking out in this market. You got a really tight flag here. I know when it compared to the beta names like Netflix, Nvidia, Tesla, Apple can be kind of difficult unless you're putting some big size behind it. You usually don't see $1 candles or $1.50 candles like you can get in a Tesla. However, you have a very, very nice pattern right here. This thing has held up really well through everything over the last couple of months. You had the big spike, you had the Warren Buffett news, you had the earnings, and that thing was holding really, really tight at about 185s to 187s. Would not go through it, and you got a solid move with the rest of the market. 190, I don't know what the exact number is here. I think it's 190.37. Don't quote me to the penny, but somewhere in that area, this 190.37, 190.30s. This is a all-time high breakout here on this one. At least it's a big-time breakout that you've got here on this daily chart. In this market climate, that should produce a solid move, and your close on Friday is sitting right there, just a few pennies below. So watch that. Now, one of the tendencies that the market has to do at times is it taps on these all-time breakouts like BABA, and then what it does one day is it just gaps up above it, and it kind of messes the trade up a little bit. But pay attention to that. Look for that level to get tested. Look for some back testing on that level. But I think if it holds up well, you see a little bit of momentum carrying into the first part of the week. There's nothing that tells me that this thing won't be 193 or 194. And of course, once you get up that way, then people are going to start talking 200. So over the course of the next few weeks, this is something that's on the table, is a possible 200 run. But what a really, really nice chart. Also, speaking of Nvidia, Nvidia is a little bit stretched here, but it's doing the same thing. I don't know, from a long point of view, it's a better buy the dip stock as an intraday, but you are starting to approach their highs. Let me scoot this thing over because it keeps squeezing. You're starting to get to a double top here from the 10th highs. So watch that area too. A little bit stretched. You can see the difference when you're talking about consolidation and explosive moves. You can see the difference between Apple and Nvidia, where Apple has a very, very tight consolidated chart like this, and you have more of that V shape going on here. I'm drawing like letters for you guys. You have more of a V shape on there with this Nvidia. Those are a little bit harder because you've already had a pretty solid move to the upside. It's already bounced from like 240 to 260, and then it gets to all-time high, so you've already missed $20 of the move, blah, blah, blah. So it's hard to expect it to go higher. But it's Nvidia. There are some buy the dip opportunities in here. I'm sure that if you just look, watch it and pick your spots, more often than not, this thing's going to at least try to get back up to the high. Now, also, not only was tech very strong, but man, whatever happened in this world that got people back on the retail bandwagon is beyond me. We saw massive moves in the last couple of weeks from places like Finish Line, Macy's. You had just an absurd move on Friday in Lulu here. I'll pull up Lulu's chart. Look at this thing. Just a monstrous move. And then Burl has earnings, I think it was on Thursday, and you had a pretty good gap up. This reminds me of the chart that we saw on Deck. Let me pull up Deck, so for those that are kind of learning chart patterns or not following along or just want to see what I'm talking about, you have your initial earnings gap up right here. And then it holds the gap, and it just consolidates for like a day. And then once it takes out the highs of that gap, it just goes just straight violent to the upside. And you got this here with this Burl. Just take a good look at this. I don't know what the exact number is. I'm going to say we're looking at somewhere around 149.89, say 150, just 150 spot. Again, parked up at highs here. You press through that. There's nothing that would lead me to believe this thing couldn't produce you some upside cash flow, considering, number one, it's retail. The market's eating this stuff up. The market's also killing anything like Apple that goes over all-time highs. They just drill those things. When I say killing, I'm not like killing down. I'm talking about killing it up. They're just running these things to the moon. These are great risk to reward trades right now. Odds on, they have a high percentage of working. Hell, watch the damn thing. It goes through 150. It's a buy. Same thing here with Shop. I mean, a lot of these are sitting back up here just, with a few ticks of the market. They're right back up here approaching all-time highs, a little bit like Nvidia with that V-shaped pattern. Needs a little work, but you're also taking out that short-term You're at the short-term resistance, I mean. You pushing through 151, there's nothing to stop this chart until it gets up towards about 155. So there's a little bit of room up there. And then again, if it can consolidate and bust through 155, hell, you might be looking at 160. I mean, a really, really strong stock. But just like NVIDIA, be very careful about the V-shaped rally because you can already see it's put about 6-7 straight green days in. So when you're talking about, again, the difference between Apple building a long-term period of consolidation and then breaking from it is a bigger type of trade that can give you a more explosive move that you can put bigger size behind and control risk better versus that V-shaped move that's already made a solid move, then it takes out high. It's a little bit different of a trade, and I think you understand what I'm talking about. And then last, I'm going to throw in a little S-fly here. This is another solid looking, just like a little baby apple over here. Check it out, just consolidating. Now this one obviously needs a lot more work. It's not in the shape that Apple is, but you know, I'm doing this here on the weekend, so who knows what's going to happen on Wednesday, you know, 3 or 4 days from now. What's going to happen on Thursday. So just put it on your watch list, goes over to the daily chart highs. It's probably a buy. So as I'm looking at it right now, there are a couple of apparent things that you have to pay attention to. Number one, buying the dip is coming back into this market. It may not be as aggressive as it used to be, and is obvious, but it's definitely there. Tech names, very, very strong. Retail names, extremely strong. These things are parked up towards their highs. Some of them are breaching up towards all-time highs. You got to put these on your list. This is what I'm going through, but I'm sure there's a dozen more I'm not even talking about. But just put them up there. Watch those. If we see any early strength trying to run to that 274s in the markets, watch that number. These things are probably going to explode and provide you with some pretty good trades. So anyway, if you need help, you know where I'm at. Thanks for watching this video. Until the next market mutterings, take care.